Welcome along to this video where we are going to be talking about HMO finance, and I'm joined by Ray Boulger of our finance partner John Charcol. And Ray, HMOs, again, a popular strategy in the current market conditions, but they're really the province of the more experienced landlord, and this kind of is very much reflected in how lenders underwrite them, because they basically regard them as higher risk, don't they?
They certainly do, and that's why interest rates are higher on HMO mortgages. Also, lenders tend to look for a higher rental cover. So although on a typical AST they'd be looking for 145%, on an HMO it could be as much as 165%. Now that's often not a problem because the rental income from an HMO is usually significantly higher. And in fact, because the income is higher, often an HMO is a sort of property that's more likely to allow you to get a relatively high loan to value, perhaps even up to 80%, than perhaps you would get on an ordinary AST. So from a landlord's point of view, clearly the risk of managing an HMO property are different. And from a lender's perspective, they're going to want to be comfortable that the landlord, has got that experience. So I would suggest anybody thinking of going into this market for the first time doesn't go out and buy an 8-bedroom property. They perhaps start off with a 3-bedroom property and get used to that and then build up gradually.
Because I definitely, the advice that we tend to give on Property Tribes is that really for newbies starting out, it's probably best to gain some experience of just a single AST type property, because, correct me if I'm wrong, but my understanding is that lenders aren't too happy to on HMOs to lend to somebody with zero experience.
No, that's absolutely right. And of course, one of the other key factors with HMOs is that the regulations are much stricter and steadily increasing. Indeed. And although you've got certain regulations that are from the government, so these are laws which people have to comply with, but the government's also given local authorities the option to introduce some additional regulations, voluntary licensing, and we are seeing an increasing number of local authorities, because of problems, perceived or not, in their area, who are requiring landlords to register their property. The fees that the local authority charge vary hugely. Some can be a few hundred, some can be 4 figures. So there are extra costs involved if you've got an HMO. So although the income's going to be higher, one's got to factor in that there's more work involved and there are more costs to incur. And appreciate that if you don't comply with the regulations, then although some councils are more strict than others, you do run the risk of being hauled up before the court, and in the worst case scenario could actually be put in jail. So I'd say before anybody gets involved in an HMO, and frankly even an ordinary AST, because there's lots of laws you need to comply with as an ordinary landlord, make sure you understand the rules and the regulations, and spend a bit of time going through those, and then decide whether you're happy with the extra obligations you've got as an HMO landlord before you decide to go down that route.
No, very, very good advice. I agree 100%. I have seen occasionally, and I'm sure it goes on, that people will get a buy-to-let mortgage and then rent that property in the format of an HMO. Essentially, by doing that, they're acting in a fraudulent manner.
With a lot of mortgages, that would certainly be the case. One of the key differentials is likely to be whether each property has got a lock on its door. If, for example, you have a property that's let to students, where each person has their own room, but there's no locks on the rooms, then some lenders are okay with that. But they will still want to make sure it complies with the HMO rules. And increasingly, as the laws get stricter, lenders will follow up by making sure that their borrowers are complying with the law, because, of course, if somebody is not compliant, then it's going to affect their ability to meet the lender's interest payments. So it's in everybody's interest to make sure that the rules are understood. And so increasingly lenders are, often through the solicitor, requiring that evidence is provided that whatever laws apply are being complied with.
So is the HMO space getting more competitive in recent times, would you say?
Yes, but only slowly. There are still relatively few lenders in that market. And if we do see that as a result of the recent tax changes, more people decide to go into that market, that will encourage more lenders to come in.
Yeah. I mean, one of the trends that I'm sort of hearing about across the forums is kind of super HMOs, where you're getting into your 8, 10, 15 type bed properties. You know, when the lender's looking clearly, is the number of bedrooms a consideration in terms of the products that are available?
That's absolutely right. Some lenders will only accept up to a certain number of rooms. Now, one other similar type of scenario that wouldn't be an HMO but is linked to this from a mortgage perspective is that somebody might buy a block of flats where they buy the freehold and there's perhaps 8 flats in the freehold. Now, a lot of lenders won't do that sort of mortgage, but there are some lenders who will be prepared to do that. So again, that's another type of specialist mortgage in the same sort of ilk, where knowing which lenders are prepared to lend on that sort of basis is really important.
And then again, we just want to stress that a mortgage broker is a vital part of a landlord's team, whether you're investing in standard occupancy buy-to-let, holiday lets, just HMOs. Ray, it is important more than ever, really, because of all the changes going on, that landlords do seek specialist advice and have the broker as part of their team, because the broker gets to know them, gets to know their portfolio, gets to understand what they're trying to do, and they can add so much value to helping a landlord grow.
That's absolutely right. And of course, if you can keep your financing costs down, that's an obvious benefit. But the other key thing is being able to decide which properties you should be borrowing money on if you've got a variety of properties. Some people, for example, if they've got plenty of equity in their residential property, may well want to use that because that's usually the cheapest way to get finance. And providing it's structured in the right way, you can still get tax relief on the mortgage interest, even though that's obviously the rules are changing there. I think the more properties you've got in your portfolio, the more important it is to have a holistic view of the whole deal and look at where you borrow the money. And if you can keep the loan to value down to something like 60 or 65% on the whole portfolio, you're going to get cheaper rates than if you've got some at 80% and some at 40%, for example. So looking at the big picture, really important. And this is absolutely something where, you know, a broker who understands that market can give really good advice.
Kind of balancing the portfolio.
That's right. And of course, the broker's part of the professional team, so people are going to have their accountant in many cases. They're certainly going to have a solicitor. And if they're doing major works like refurbishment, they may well have an architect or other professionals like that on board. But think of the broker as part of the team, and everybody needs to work together. I mean, we don't give tax advice, but we do need to have enough understanding of the tax implications to understand when there will be some sort of impact. And we would always strongly advise people to make sure they get good tax advice from their accountant or whoever their tax advisor is.
Yes, here, agree 100%. Do you see HMOs continuing in popularity and perhaps more innovative products coming into the marketplace?
Well, whether they continue in popularity perhaps depends on how you define popularity. I see HMOs becoming a bigger part of the market on the basis that more properties are being designated HMOs. Whether more people will actively choose to have an HMO is a different ball game, but in reality they will probably be driven down that road simply because properties that 5 years ago would not be an HMO either will be today or maybe in 5 years' time.
Right. Well, indeed, and that's actually a very good point you raised, that when the new licensing regulations come in, there are going to be properties that actually previously weren't categorised as an HMO that are now an HMO. Is that going to affect the finance position of them?
Well, it will certainly affect the remortgage situation. If a property is designated an HMO during the time you've got a mortgage, then you wouldn't have to do anything different just because it's become an HMO. But you certainly would have to factor that in when you're looking to remortgage, and therefore that's definitely something people need to take into account. If they have a portfolio where they can see one or two of their properties or more of them becoming HMOs, certainly need to bear that in mind when you're likely to need to remortgage.
Well, that is a very good heads up there. That just popped into my mind there when we were talking, that actually, yes, that's going to be a consideration for people that are going to find that they are now actually categorised as an HMO, and it's going to affect the finance. So they need to be aware of that.
And other things like the new rules on EPCs, lenders will, if they're not already doing it, and some are doing it already, be asking for confirmation that you meet those requirements, because lenders are always going to be looking to make sure that they're only lending on properties that meet all the legal requirements. Right. So again, somebody who had a property that was readily remortgageable a year or two ago may find in a couple of years' time that because of a change like that, actually it's not straightforward. Mm-hmm.
Indeed, and we should just point out, actually, you've hit another interesting point there, is that HMOs actually don't need an EPC in terms of serving it on the tenant, but they're going to definitely need one for lending purposes.
That's right, absolutely.
Yeah, fantastic. Well, we've covered a lot of ground in this interview, Ray. Very interesting talking to Ray, I'm sure you'll agree. And if you are in need of any finance for your property business, then John Charcol are on hand to support the Property Tribes community. So please get in touch with them. We'll put all the contact details below this video.